Time for business. Kate Moody joins us. Unions in Greece have held a nationwide strike over a new labour reform. Tell us more.
Well, some 16,000 demonstrators turned out on the streets of Athens, thousands more in other cities, to protest a bill that was actually already approved by the parliamentary majority earlier this week. The government says it's trying to make the labour market more flexible, but unions argue that the changes will exploit workers. Laurent Berstecker reports.
8-hour working day. Thousands of people took to the streets of Athens to voice their opposition to a planned labor reform, which some have equated to modern-day slavery.
Οι νέοι και οι νέες που αν καταλάβουν και συνειδητοποιήσουν τη δύναμή τους μπορούν να το αχρηστέψουν, μπορούν να το στείλουν εκεί που ανήκει στα σκουπίδια για να μην ζήσουν μια ζωή σκλάβου.
The reform, which seeks to make the Greek labor market more flexible, would allow the working day to be expanded from 8 to 10 hours in return for more days off, but no extra pay. It would therefore be up to staff to personally negotiate their working hours with management. But opponents fear it will formalize the overtime exploitation of employees and undermine collective bargaining.
Είμαστε εδώ για τις ζωές μας, για το μέλλον της χώρας, για τα παιδιά μας. Είμαστε εδώ ώστε ο εργαζόμενος να μην γίνει ήλωτας που εργάζεται για 12 ώρες και πληρώνεται για 4.
Greece's liberal government, meanwhile, says the reform will allow employees to take more time off, improve parental leave, and help combat sexual harassment in the workplace. A positive spin which has failed to convince unions and the opposition.
Inflation in the U.S. is rising at its fastest pace in over a decade. In May, consumer prices were 0.6% higher than the previous month, but fully 5% higher than in May of last year, when the pandemic and lockdowns had thrust the U.S. into recession. Among the elements driving that hot inflation, the rising cost of flights, household goods, and clothing, as well as a 7.3% jump in the price of used cars. The core inflation rate, which removes volatile food and energy prices, rose 3.8% compared to last May. That's the biggest jump for that reading since 1992. The changes are linked to rising demand for goods and services and manufacturers passing along the higher costs of raw material and transportation. The U.S. Central Bank targets steady inflation of around 2% and says the current spikes are likely to be temporary. If not, the Fed will face more pressure to raise interest rates and reduce stimulus. If inflation drastically outpaces wage increases, it can make life too expensive for workers. The European Central Bank has kept interest rates and stimulus on hold. The ECB raised its forecast for the Eurozone's economic recovery, expecting GDP growth of 4.6% this year compared to its previous 4% forecast. Inflation is expected to accelerate to the ECB's target of just under 2%, and the bank will continue its €1.8 trillion bond buying program through next March. Its current pace is about €85 billion per month. ECB Chief Christine Lagarde said that support would continue throughout the pandemic, and although describing the outlook as more optimistic than 3 months ago, she cautioned that risks remain.
On the one hand, an even stronger recovery could be predicated on brighter prospects for global demand and a faster than anticipated reduction in household savings once social and travel restrictions have been lifted. On the other hand, the ongoing pandemic, including the spread of virus mutations and its implications for economic and financial conditions, continue to be a source of downside risk.
Let's check in on the day's trading action now. Wall Street largely shrugged off concerns about inflation. The S&P 500 rising to a new record high. The Nasdaq up about 0.75 percentage point. Shares of Delta Airlines and Boeing were among those trending higher. A mostly lower close for the major European indices earlier. Just the FTSE 100 ending slightly higher in London. Some 15,000 French restaurant owners who held policies covering unexpected losses of revenue say the insurance giant AXA has reneged on its policies by refusing to pay them in recent months. AXA has today offered a €300 million settlement. James Vecina reports.
An offer that the insurance giant AXA hopes will bring an end to months of legal battles. The company's putting on the table a package worth €300 million for some 15,000 restaurant owners in France, having held insurance policies that were meant to cover their losses if they were forced to close. But AXA had until now refused to pay out, arguing the contract didn't apply in the case of a pandemic, leading to hundreds of owners taking legal action, many of them successfully.
We're still waiting to receive the cheque from the lawsuit, but it's very good news we're hearing today. Finally, they're admitting that the clients are right.
The payment offered will cover 50% of losses during a period where restaurants were forced to close. It's expected to average around €20,000 per business.
We saw that the courts handed different rulings. We want to put this behind us. We're giving out €300 million to the 15,000 restaurant owners who are signed up with us so that we can help with the industry's revival.
AXA says it can start making payments by the end of the month. Groups representing restaurant owners say they're waiting for details of the package, but that for many businesses, the amount offered is insufficient.
That's all the business news for now, Mark.
Kate, thank you very much indeed. Kate Moody with the business. You can see it, of course, again via our website, france24.com.